Hello traders and welcome to another video review. Today is Friday, February 25th, 2022. Let's start with the Forex calendar. Plenty data from Japan had been published overnight during the Asian session. National CPI and retail sales data, all of them are right now released together with the housing starts and leading indicators. The most important from all of this data is the national CPI, which is increasing from 0.6% to currently 1%, which is more than a forecast of 0.4%. During the London session, we got the data from Germany and France in form of the input price index, GDP, consumer price index, and retail sales. As we can see, input price index from Germany increased to 4.3%, while the market expected 0.2%, which is way than the last reading of 0.1%, and the GDP is increasing from minus 0.7% quarter to quarter to minus 0.3% quarter to quarter, and on a yearly basis from 1.4% to 1.8%. Those data are from Germany. We are still waiting for the data. GDP data and consumer spending data from France. Very interesting it will be to see the consumer price index that is scheduled for release at 8:45 a.m. and the market participants expect only 0.4% increase. 10 o'clock, money supply and private sector credit from the Eurozone, and then of course at 11 o'clock consumer confidence from the Eurozone. During the New York session we got some data to release as well. 2:30, PCE core, personal spending, personal income, and durable goods orders are scheduled for release. As we can see, personal spending is expected to increase from minus 0.6% to 1.6%, and the durable goods orders are expected to increase from minus 0.9% to 0.6%. University of Michigan inflation expectations are scheduled for release at 4 o'clock together with the Barker Hughes US recount. This is data for the crude oil traders and pending home sales. All of this data are scheduled for release at 4 p.m. What should we see first? I guess we should take a look what is going on the Japanese yen first, and then we'll take a look at euro and of course at other currencies. Daily time frame chart of the USD to the JPY, US dollar versus the Japanese yen, is very interesting. After the top at the level of 116.35, we have a test of the trend line. This orange line here is a long-term trend line. The market pierced this trend line yesterday, of course, but as you can see, this candle is very big. It's a big up candle with high spread made on the positive territory, positive momentum territory. The highs were at the level of 115.71, so we broke back above the orange trend line and back above short-term black trend line. So it looks like people are buying the US dollar, and the Japanese yen is temporary retreating from the dominant position. We expect another up wave soon. What is then doing the whole US dollar index? The US dollar index jumped towards 97.77 technical resistance with the high of 97.71. However, there is a big upper shadow on a daily time frame chart of the US dollar, and the close was around the level of 97.06. So it looks like we are still in the positive territory. The people are still buying the US dollar, and as we expected many times before, we are still going up on the US dollar despite the of course temporary issues with the levels, technical resistance levels. Right now 96.42 and 96.61 are the technical support for sure. So let's just change the colors for the support colors, which is green. 96.88 will act as a resistance for now, and the intraday resistance is seen at 97.47, and the key technical resistance in short term is 97.77. Momentum is strong, momentum is positive. We expect US dollar index to go up. However, what is going on right now on the spot gold market? It looks like someone pulled the rug under the gold market, because this is very, very interesting candle here. This is a massive pin bar, massive spike up, and then of course the reversal after the level of 1965 was broken. The high 1973 didn't last for long, because the close is actually in red, $1,903. This is a high volatility pin bar made at the top of the up move, which means, as I said, someone pulled a rug under the gold bulls, and right now we have this massive almost was $80 upper shadow on the gold after the key supply zone had been violated. But the momentum is still strong, the momentum is still positive. It's extremely overbought, because we got almost a $200 move during the recent not even a month, right? So 4 weeks of trading, and we have $200 move. So right now the momentum is very strong, extremely overbought. However, if this market is trending, then that situation might be seen on the spot gold market for quite some time. The key short-term support is 1877 and then 1854. As long as market trades above these levels, we of course are still bullish on gold. What is euro dollar doing? The euro dollar made a massive bar again, and this massive bar, as you can see, has been made towards the level of 1.1121. Actually, the low is 1.1106. So we broke below this level. The lows of the January this year, and it looks like the euro is heading way lower towards the next technical support, which is, as you can see, far away from the current levels. Because if we break for sure from 1.1121 and that breakout will be sustained, the next target is area around 1.1. 1.1 is the next target, so it's 120 pips away. That's a lot, and we can be sure that this channel here will be maintained, and the multi-month downtrend will continue as well on the euro dollar. And last but not least, let's take a look at oil. Let's take a look at oil first, and then we are going to take a look at Bitcoin. So what is going on oil? The oil has hit our targets very well. This is the top for the wave 5. We should see now a corrective decline on the oil. We have a massive pin bar here towards even 300% extension, 101.37, and 261 was hit for sure, 98.88. So right now, what do we expect? We expect a breakout to the downside because of the correction coming. We have a bearish divergence between the wave 3 and wave 5, which is clear if we take a look at the RSI, and now we should keep an eye on 88.23, because this is the key technical support, and 84.88 because this is another important technical support. How much we should expect market to drop? I guess like a 10% correction would be welcome. So 10% is the level of 88.23 is 12.24%. So that might be a nice correction, which indicate that it's not a part of the uptrend anymore. So correction expected on the crude oil and the Bitcoin. Last but not least, we talk about Bitcoin. What is Bitcoin doing? Very interesting candlestick here. Let me just zoom in. We have a very interesting candlestick yesterday. Lows 34,000, highs 39,000, so almost $6,000 spread between high and low. However, the key low 32,905 has not been hit yet, not violated. Nevertheless, the force that is controlling the market right now is still supply. Bears are in control of this market despite this very strange pin bar. Key technical resistance 39,265, 39,540. So without going above this level here, without any sustained breakout, we can't say anything about the return of the bull to the market of a Bitcoin. And as you can see right now, let me just copy one more level for you guys. There you go. Not exactly what I wanted. I want this one, and boom, there you go. This is the wider zone here for 45,886, 45,000, yes, 886. So that's another level for this zone, and that's apparently the key zone for the return of the bull. Return of the bullish market. First confirmation, breakout of the 39,000, basically breakout above 40,000, then 41,868, and then breakout above this zone between 44,409 and 45,811. So this is a 45,811. This is the level that needs to be violated in order to say that the bullish market has returned to Bitcoin. Otherwise, we are still under the influence of bears, and they will try to break below 36,155 and go towards the January lows, despite the high volatility candles that we can observe on the chart. This kind of candle happened, of course, yesterday. So please keep an eye on the levels, and I hope we will meet again next week. So it's everything for me for now. Thank you very much for watching this analysis, and I hope I see you guys on Monday basically. So take care and bye bye.